Hey everyone, and happy Mortgage Tip Tuesday! Today is an even more exciting Tuesday because today is Fat Tuesday or Mardi Gras. So go out, get you some beads, have some fun, eat some food for me. And if you're in New Orleans, have a great time and be safe. Of course, today is my favorite day of the week because besides it being Fat Tuesday and Mardi Gras, it's Mortgage Tip Tuesday, and who better to come at you with some information than it's your girl, hashtag JLoan. That's right, in the building. And today I want to talk to you about a situation that happened to me, and now I want to give you this information as to why it is even more important for you to please make sure that you're not just getting pre-qualified, but that you're actually getting pre-approved. And on top of it, making sure that you're being completely 100% transparent in your mortgage pre-approval process to make sure that as your loan moves along, you don't have or run into any issues. So let's first start with my story. And this has to do with area median income, and you may know it as AMI, or you may not know it at all, and that's okay too, right? So here's the situation. So my primary borrower is a first-time home buyer, buying a home for the first time and needing that hand-holding. And most of the time, I don't run into an issue where AMI is actually an issue. Well, last year, towards the end of the year, Fannie Mae put out a bulletin in which I tell you guidelines and things change all the time. And they put out a bulletin in regards to LLPAs, which if you don't know, you should go watch my video from last week on what these LLPAs are. So loan level price adjustments. So again, these are things or reasons why you may get a different interest rate from someone else because of these loan level price adjustments. So long story short, had a borrower come in, provided their tax returns, they were self-employed. I calculated their income, which I have done 5 million times, and sent the loan in. When the priced the loan, did everything. Well, when I calculated the income, I used a lesser than what underwriting used, okay? So in my history, when I'm calculating self-employed income, I only use the income that I need to qualify the borrower. So other things like adding back in mileage or things of that sort, I don't add back in because it's unnecessary, we don't need it. Well, when it went into underwriting, they used all of the income and increased my income to now their income. And when they did that, it caused their AMI to be above 100%. Now, this only goes for conventional loans for first-time home buyers. So now, based on last year's bulletin, if you're above 100% AMI, then your pricing or your rate is higher than if you are a first-time home buyer and your AMI is below 100%. So when I priced it using my income and locked the loan was locked under 100% AMI. So when underwriting came out, my lock desk came back and said, hey, what are we gonna do about this adjustment? Is the borrower gonna pay for it, or are we gonna get a higher interest rate? So I'm in panic mode because I'm like, what? Because we get these bulletins, but unless you're using them all the time, you may not remember. And our systems do automatically calculate it. So it's not like I can make a mistake. So I'm in panic mode, like, oh my God, imagine this 2 weeks before your closing date, someone's coming to you telling you now we can't give you that interest rate and you're gonna have to pay higher fees, okay? So luckily I was able to show the underwriter that we didn't have to use that additional income, or plead my case. I didn't show the underwriter, but just plead my case that do we have to use this additional income? And we didn't have to. But So it saved that file or that conversation with the borrower. But here's my thing. A lot of the times when I talk to a borrower, they really don't even know how much they make. So that's one. But if you just get pre-qualified, then all you're doing is really just giving verbal information, and you're providing them access to pull your credit and run it through automated underwriting. Well, if once we receive, or that lender receives documents, and now you make more than you believed you did or you disclosed on the application, then the pricing that they gave you may not be the pricing that you're going to get. Now, we all know rates change every day, all times a day. So we're not talking about just rates changes. We're just talking about your expectations of cost and your expectations of rate of what you believe you will be around. Of course, also, if you're in a transaction, it's very important to really know where you stand in this. And again, this is just for conventional loans. This does not apply to FHA, VA, your USDA, or your government loans. It doesn't apply. So this conventional first-time home buyer, AMI is super important. But as we discussed last week in LLPAs, what's even more important now is your debt to income, because now there's also a loan level price adjustment if your debt to income changes. So in my situation, I had already approved them on the lower income, but let's just say someone else did the reverse, or the underwriter came back and calculated different, and now your debt to income is higher than 40%. Now you're subject to worse pricing or worse rates. So you don't ever want to be in that situation. And that's why it's super important to get pre-approved. Now, I was talking to a realtor yesterday, and I was like, a lot of the times borrowers say, man, you guys ask for a lot of information up front. And this is the reason why, because we actually here at Union take that income, take everything you give us, and we send it straight to our underwriting income help desk, and they calculate the income so that we do not run into these issues later on in your file, so that this may happen. Now, on my part, this did get calculated, but the borrower had not found a contract yet. So I didn't even really look at it. I just made sure that the income wasn't less than what I calculated. So again, it taught me something about being very, very aware of that AMI on a first-time home buyer on a conventional loan. But again, I studied my guidelines, and even I bypassed that. And so again, you can fool me once, but you won't fool me twice. So the important thing here is to make sure that you're, one, dealing with a loan officer who's very knowledgeable, and then two, to make yourself knowledgeable. Because if you're aware of this beforehand, you can actually look up your area median income actually online. But again, you don't have to do all of that, right? Because I am here to help you with that and guide you through that, these guidelines and these rules, because it's too much for a consumer to know. But I do these so that you're well aware of what is out there and all these things that are coming around. And of course, my first instinct was like, what? So they're penalizing the borrower for making more money and being a first-time home buyer? And the answer is, yeah, that's just a reality. There's affordable housing measures that are there to help borrowers who don't make a lot of money to afford housing. And then for those that make a lot of money, unfortunately, you're kind of penalized. I don't know how to say it better, but that's really what it is. So anyways, not to make this video long, I'm very transparent. I like to let you know when I too find out something, or when I almost make a mistake that in which I couldn't have even imagined having to make that phone call to a borrower, because they wouldn't even really understand what is going on and why do I have to pay more? Why do I have a higher interest rate? So don't let this happen to you. I'm done. I'm not going to let this happen to me ever again. Luckily, I was able to save it. But all in all, hey, Mortgage Tip Tuesday is done. It's over with. Until next week, next Tuesday, be safe, be blessed, and have a fantastic rest of your week. Bye-bye.